Hey, if I do my job well today, this is gonna be the last YouTube video on ETFs you ever have to watch. There's two reasons for my excitement. One, I found a holy grail of ETFs. Number two, I am going to explain to you the very easy steps that you can recreate for yourself to get to your holy grail ETF. And the good news is it only takes 4 steps. Step 1. Understand what an ETF is. Now, you're already watching this video, so I assume you already know more or less what an ETF is about. Just quick summary. An ETF is a low-cost investment fund that trades on public exchanges. They do it just like public company stocks, so we can buy them and sell them rather easily. And as a fund, they will hold a whole series of stocks or bonds or commodities or a combination of those. And so they will then track the performance of these assets. And this is really amazing because it means that by buying an ETF, you immediately invest in a diversified portfolio. And as we all know, in investing, diversification is a superpower. And then there's these various types of ETFs. But you know what? Instead of me explaining all of this right here, just check out this video over here and it will give you all of the information that you need to know. And it also involved an onion when we were filming that. So yeah, that was pretty fun. Check it out. But back to choosing the best ETF for us. We now have a pretty good understanding of what an ETF is, so we can go over to step number 2, identifying the top performing ETFs. You know, there's a really nice ring to that, right? Top performing. But what does it really mean? What are we top performing against? Against which criteria? Is it just annual growth? Well, no. I like to consider 3 elements in choosing my top performing ETFs. And this is going to be for my first filtering. We have performance, of course, yes. We want to have something that grows nicely over time. But 2, what I also find very important, reliability. How long has an ETF been on the market for? I like to look at ETFs that have a nice track record so I can see if they manage to hold that performance over time. And in my case, I would like to have ETFs that have been around for 10 years or longer. And then costs, that's number 3. How much does an ETF really charge for the privilege of holding this ETF, for managing this ETF for you? So we want this cost obviously to be as low as possible. So considering these criteria, let's look at what an ETF screener has to offer us. I found ETF.com to be really nice. We'll be going over to Tools and Data. And we have Screener and Database. This is exactly what we need. So let's take that one. And here I will want to go to Trading Data. And I don't want the expense ratio to be too high. So we're gonna be lowering that as much as possible. I'll put it at 0.60, like so. Then I also want to make sure that I can rank everything by performance over here. And what I'm interested in my case, is I would like to know on 10 years time, what are the best performing ones. I have now the 10 years ranking over here, and boom, this is what I will want to look at. Okay, step number 3, evaluating the ETFs. That means we're going to go through the ETFs that we got here with a fine comb. So we have a few ETFs focusing on semiconductors, and that's like the same as microchips. Basically, you find microchips everywhere in microwaves or your phone or anything in between, and our lives are impossible without microchips these days. So, if you'd like to invest in microchips, if having a sector ETF is not scaring you away, then which one would you take? Let's have a look at the top option over here, XSD. Now, I don't want to just look it up over here, because when I do that, you'll see that I get only very limited information. I would like to go and hit, for example, etfdb.com. Let's have a look for XSD. And here we go. We have here the analyst report. This gives us already a bit more information. And afterwards there is also a nice little summary of some of the top information right here down below, which is really great. So what am I looking for? This fund dedicates the majority of its assets to medium and small cap funds, meaning that it will be more volatile than a traditional large cap fund, but it also presents strong growth opportunities for those who believe in semiconductor segment of our nation. I'm completely fine with this equal distribution around things. That's fine. It seems that they have a pretty good track record. But what I don't like too much here is that they only have 50 securities in total and that they're only US based. I believe in the US, but it's also good to spread a little bit more internationally. For the expense ratio, I see here 0.35. So XSD, not really my favorite. Let's move over to the next one. Let's look up stocks. Over here, 0.35. So that's pretty good. Close to 125 securities in total. It's already a bit more diversified. And then here it says also they're focused on US stocks, but they also put 1/4 of their assets in international firms. So that is something that I can appreciate. I'll want to see here the holdings, top 15 holdings. Okay, I mean, this is more or less what is to be expected. I like stocks better than XSD. They're still very high ranking and they have exposure to more international companies. I also like that they have a diversification over 125 companies versus 50 of XSD. And so if I had to buy an ETF in semiconductors industries, I would probably consider this one. Of course, you will probably want to go down the list a little bit because you see that the returns are still pretty good across all of them, and maybe there's even one with a lower cost ratio, and so maybe you'll want to have a look at those as well. Okay, that brings us to step 4. Evaluate the future and the risk that you're willing to take. So the problem with investing is we only have data on the past, and as everyone keeps telling you, past performance is not indicative of the future performance. Now, what does that mean? How do you see the future of the ETF that you're willing to invest in? And we're talking about really high interest rates here, so that also signals in general that there's also a higher risk that you take. Is this in line with your risk appetite? Or would you be better off with something that is a little less risky and gives you a little bit less of a return? That's going to be up to you to see for yourself. Now, in this specific case, I would be tempted to buy this ETF, and I would counterbalance it with more diversification across other ETFs in my portfolio. Especially because this is a sector type ETF, and I would probably want to add a few more different types as well. This viewer right here shared their ETF recommendation last time in the comments, which was very much appreciated, so thank you very much. I'm also curious to hear about your ETFs, so sound off in the comments below. Now, as a bonus, of course, I'm just gonna post all of the links that I used in this video down in the description, so you'll be able to use the same resource that I was using. Okay, congratulations on reaching the end of this video. Here's your reward. If you found this video helpful and you're happy with this extra little point that you got, consider subscribing, and I will be happy to see you in the next video. Catch you later. Cheers.